Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We have a week full of major red news, and today we're going to go over gold trade. From today, we'll talk about the US CAD opportunity that presented as well for traders, and we're going to review the first bounce because there's been some confusion about that, and we're also going to talk about some simple processes and why it's so important to be prepared when you come to the screen. So we have the whole week. We have Monday right through Thursday, full of major red news on different instruments. But in the U.S. session, particularly for me, I trade in the U.S. session. We had CPI today. Tomorrow we have core retail sales, Empire State Manufacturing, and retail sales at 8:30 again, New York time. And then on Thursday morning, 8:30 a.m. again, core, PPI, and PPI being released together. Now, obviously, the other instruments in here, the Swiss franc had CPI yesterday. On Monday, New Zealand dollar inflation expectations. So just to review, this is a news catalyst momentum trade setup. What that means is that there's already a trade setup in place. We must have a 15-minute setup heading into the news. The trade setup must be in place to be taken as a normal trade. The reason why that is critical is that because you would take that trade in a normal situation except that there's major red news. The first bounce is when the trade explodes and breaks out, and the first bounce is the opportunity to re-enter that explosive movement, typically between 15 and 30 minutes after that initial burst. It can be at 11 minutes. It can be at 15 minutes. It could be at the beginning of the next 15-minute bar, but we're using the 1-minute chart. But listen closely. It is an explosive breakout trade, either from a reversal or from a continuation move on a 15-minute setup. What that means is that the explosive move has momentum behind it. The first bounce is the re-entry into that explosive movement. And I make it very clear in here. And I'm going to spend 10 seconds on this so that you can really absorb this. This is a momentum trade acting on the news catalyst. It should continue to move strongly almost immediately. If it auctions against me or does not follow through almost right away, I will not wait to get stopped out. I will cut the trade immediately. Page 101 in the playbook. Now, we're going to talk about this today because several traders talked about taking first bounce trades and either getting out or not getting any profits or whatever. There was no first bounce trades. Specifically on the pairs that I traded today, there were no first bounce trades. But let's talk about this. Let's say we have our consolidation heading into our trade major red news. We could have something that's given us potentially a short squeeze setup, maybe. I don't know. What needs to happen for a first bounce opportunity is that this market needs to explode on the news, and what we are looking for on our re-entry is the first bounce, which is clearly defined in the playbook. That first bounce could be at 12 minutes, it could be at 23 minutes, it could be at 17 minutes, but we have criteria that define our entry into that. Now, we also need to see that move and follow through immediately as specified in the playbook, because it's a momentum-based news catalyst off of a 15-minute setup. So, for example, this could actually be a 3-day setup. This could be Monday, Tuesday, Wednesday. It could be Thursday, Friday, Monday. It could be Tuesday, Wednesday, Thursday. But it typically will be a 3-day setup. And then on top of that, we may now have a possible range expansion as a profit target. Now, we could also have something that works Monday, Tuesday, Wednesday. we get up and we get up into the high of the week, and the news catalyst could explode this way. And our first bounce may come as a re-entry. Again, it needs to move quickly. We could have a range expansion on the downside. We can typically see this on a Thursday or Friday towards the end of the week for a measured move down, sometimes of twice the box on gold, oil, etc. And continue right away. It could come off the high of the week and break down, but it needs to continue right away. But it needs to break out. It needs to explode and continue right away. Now, I put this gold chart up on the community post today because we had week 3 shorts triggered into the market. We had a Friday, Monday, Tuesday narrow range forming between the peak formations made on Friday. We've triggered shorts. There's a possibility we could have seen either an explosion down for a measured move or an explosion up for a first bounce reversal. Lots of room down underneath, which I demonstrated on the community post. There was a possibility this market could have had a first bounce move down through the low of December, where we had our breakout continuation on the parabolic setup. We have our opening range for the week, and we can just clearly use that to demonstrate the rectangle high and low of the new week. Our opening range will get rid of this high-low indicator. And coming into the news, we immediately broke down to the low before exploding back through the high of the day and the high of the week. We'll call this the high of the current day. This is the high of the current day. This is the high of Monday, the opening range, and the high of the week. So the market reverses and explodes through the high of the week before engulfing. This is my first major red flag on a first bounce, the engulfment at the high of the day, the high of the week. Prior to anything else, as soon as this engulfment happens, I'm suspicious because we have not exploded outside of the range. We have now reversed, and this could potentially be a false break. We're going to talk about a few different scenarios, but in terms of simplicity, we're going to just stick to this basic high-low chart after the news. So the question was, why wouldn't the 8:45 a.m. candle on the 1-minute chart be considered a first bounce entry? I'm going to play devil's advocate and say that that is an entry. Let's say we took this long as a first bounce. Although it was contained inside the high and the low of the week, we did not get an explosive breakout, which would have had to have happened in order for us to conceive of this as week 3 shorts trapped. And we now have a breakout for an explosive momentum trade reversal and a news catalyst for a potential first bounce entry. So if we took this trade, we would, let's say our max stop is our 1-bar stop because this is a news catalyst momentum trade opportunity and it should follow through. So we've gotten into this trade. However, when it trades back up into our engulfment high, it auctions back down into us. But then, lo and behold, it continues. 5 minutes before the end of the hour, it continues back in the long direction. This is really important because I've talked about the importance of timing. So now we've been in this trade almost 15 minutes when the new hour opens. So we've been in this trade almost 15 minutes. Now remember what I said. This trade should follow through almost immediately. If it auctions against me or does not follow through almost right away, I will not wait to get stopped out. I will cut the trade immediately. The importance of a timing cycle is that when a new hour starts, what can happen? We can have a market now that moves against us in the opposite direction. We haven't had the follow through immediately like we are supposed to have seen. We are still trading inside of the false break at the high of the week. The new hour opens and breaks the lower high. This bull candle pin, I'm going to highlight this. We're just talking about time and nothing else. We have our first candle of the second hour. breaks the lower high before breaking down underneath of that opening candle. That breakdown below the opening of that second hour and an engulfment is an entry in the short direction. Now we are 23 minutes since we've entered that trade. That is not a follow through for a first bounce trade. So here's what I'm going to suggest. When the second hour started, you had 16 minutes to still get out of this first trade. If you did not get out of that trade, what were you thinking? What were you thinking when it came down and went back and the second hour stopped? It is supposed to explode through immediately on a news momentum catalyst. So when we're into the second hour and you're still holding on to this with a 1-bar stop as a max risk and you haven't gotten out of the trade, what were you thinking about being in that trade still? All I'm talking about is time, nothing else. We've been in this trade for 20 minutes. 20 minutes. What's supposed to happen on a first bounce momentum trade? It's supposed to follow through almost immediately, or I will cut the trade if it auctions against me, which it did. It followed through. It allowed me to get out with even a small profit. It allowed me to get out. But now what I want you to consider is this. That second hour opened and pumped up, broke down below the opening candle and gave us an engulfment underneath of the high of the current day. Now, if I put my numbers on here and we just redraw a couple of our lines, I want to paint a couple of other scenarios. Most importantly, time. If you're just patient, I said this in the post, if we do not get a first bounce explosive move, the next most important time is the New York Open. Now, in this particular case, the second hour gave us an entry prior to the New York Open. We had a peak formation high and a lower double top. These engulfments going higher lows with equal high lower highs. That is the lifting the offer. They're lifting the offer and getting traders caught up high. We get our engulfment inside the high of the current day at double zeros. We have a 200 pip box from high to low, a 200 pip box. The midline is the double zeros. Guess where our death line is? Our death line is at the double zeros. Now, there are traders out there who crush this today. The biggest thing is patience. But as I said, this engulfment at the high of the day is a red flag. That is not an explosive breakout. Explosive breakout on a news catalyst with a 15-minute setup. This is a death line reversal short trade from double zeros to double zeros. Now, when we get down to the low of the day, opportunity to lock in profits, but also the understanding that this market, as I have repeated over and over again, and it's in the playbook, page 107, most stop hunts are 25 to 50 pips outside of the high-low range. Page 107, this market goes just past the 50 pip range at the beginning of the New York Open, false move at the beginning of the New York session for 50 pips, consolidates at the low of the day for an explosive short squeeze back in the opposite direction. Now, two things. I did not know what to expect. We had week 3 shorts trapped. I was potentially looking to see an explosive move, but we have 3 days of major red news on the calendar. This could be setting up for a first bounce opportunity tomorrow, could be setting up for a first bounce opportunity on Thursday. I have no idea. But when I come to the screen, I have to have a thesis based on what I see on the chart, the template, the day count, but I can only trade based on how price behaves. Think about what's happened here. They have trapped volume in the upper box. Ask yourself this question always. If you are buying away from the low of the day, what happens if they pull the floor out? What happens if they pull the floor out? That is not how we trade. We need it to explode out in order to be buying a first bounce catalyst. Otherwise, we are inside the high and the low. If we buy high, guess where this can go? If they pull the floor out, there's a death line. 3 pushes up, peak formation and a lower double top for the reversal, right at major round numbers, and the collapse. They've lifted this market up and pulled the bids and let the floor drop out from underneath. No first bounce trade, but everything is clearly defined. We have specific criteria. This needs to explode out. Markets only do 3 things. They break out, they pull back, and they trend, which is typical for a first bounce entry, even if it comes from high of week to low of week, or low of week to high of week. It's broken out of a range. It will pull back and coil and explode with momentum based on that news catalyst. Or number 2, it breaks out, fails, and reverses, the reversal trade. Or it trades back and forth in a trading range, which by all accounts is all this did today. On a bigger picture, we had a high and low of the week, and this market essentially has broken out of the low of the week, pushed the range a bit further, but essentially stayed in a trading range. Now, again, I'm talking about at the session timing window, what I would need to see a first bounce catalyst. So it's very important. There was other session trades and great opportunities in other markets, but I needed to clarify this first bounce trade entry, because trading inside of a high and low is not a first bounce entry. Keep it simple, focused on getting better, 1% better every single day. Grow your trading business, grow yourself, get better at it. Getting frustrated, not making any changes, not doing anything different is not going to make you a better trader. Do what you need to do to get better and start it right now. Have a great day, traders. 1% better every single day.